Thank you for that kind introduction. Well, it's an absolute pleasure to be here today. As you heard, I'm president of S&P Global Sustainable One. What is Sustainable One? Well, Sustainable One is a group of around 500 people who are experts on analyzing climate change and sustainability, sitting at the heart of S&P Global, serving all of our main divisions with sustainability intelligence. And so it's a really important investment in sustainability that we're making at S&P Global, and it's a great pleasure to be here today. I recall very fondly the launch of LGX 5 years ago. I was actually there in person, and it was a fantastic event, and I just wish I could be there with you today as well. So what I thought I would do is reflect on a decade of progress. And I thought I would look back 5 years and also forward 5 years so that we can be clear on what kind of change that we wish to drive in the market, as well as what has happened in the past. In terms of what has happened in the past, obviously 5 years ago we had the Paris Agreement. We had huge momentum from the finance community at that time who turned up in force in Paris. That was fantastic to see. Shortly after, we saw some really large-scale green bonds being issued. For example, Apple, $1.5 billion in February 2016. So some scaling of capital flow, both in equity and debt capital markets at the time. Data was reasonably abundant, but we would say probably not quite investment grade at that time. So hence the TCFD was established, the Task Force on Climate-Related Financial Disclosures. That was established around 5 years ago. China issued its guidelines for establishing the green financial system, and the EU was contemplating its sustainable finance action plans. So lots happening, but we have actually made a lot of progress since then. We have a whole climate movement led by Greta Thunberg and her colleagues. And interestingly, in addition to raising global awareness on climate change, it has also, I think, stimulated some really interesting attitudes amongst the millennial generation. We do sit in the midst of the largest wealth transfer to the millennial generation. And that generation, according to many surveys, has a real impact focus in terms of finance and investments delivering not only return, but some impact for society as well. We've seen significant capital flows. So capital flows have really been ramping. We expect green bonds to exceed $1 trillion this year. And also we see that for ETFs, ESG accounts for around 50% of fund inflows in Europe. So that's quite remarkable. And we see that the green recovery, post-pandemic green recovery is a theme. So 30% of funds in Europe, recovery funds, will be dedicated to green and sustainable outcomes. And we see that the marketplace is being increasingly regulated, in particular on disclosures. So everyone from companies, 50,000 companies in Europe, through to asset managers and banks, all having to be thinking about more robust formats of disclosures because that is the direction of regulation. So we see the EU Sustainable Finance Action Plan endorsing and pushing the sustainable finance disclosure regulations for finance institutions. We see the EU taxonomy, of course, and we also see the Corporate Sustainability Reporting Directive applying to 50,000 companies in the future. But we also see the SEC in the United States examining disclosure rules starting with climate, and the IFRS creating accounting standards in this space in record time as well. So lots of regulatory activity. Why? Because we need more disclosure and more information flow that is valuable for the allocation of capital. We do, alongside of that, see major improvements in data. So for us, for example, we now have 700 billion data points on the physical impacts of climate change. We have mapped over 3 million assets owned by 110,000 companies to those climate hazards. And we have scenarios, forward-looking scenarios, on how assets owned by companies are going to be impacted by climate change. So we have now a lot more data than we used to have 5 years ago that is decision useful. And the users of data have changed. So it's moved from really being something that asset managers will be primarily focused on to now encompassing private equity firms and pension funds and banks Regulators, so the network for greening the financial system, and central banks are now using a lot more climate data. Companies, for benchmarking purposes, are using huge amounts more data than they might have done before. And increasingly retail investors, which is an important space to watch, we believe. And we're seeing more interaction between companies and their investors. The sale on climate, votes, all sorts of different engagement formats for companies and investors, and an enhanced communication flow, we hope, being more persistent between companies and their investors. So what will happen 5 years from now? Well, we expect that climate will no longer be some kind of thematic aspect of the market and will be mainstream. We expect capital flows to become very large. Every fund will report on climate and ESG in what is likely to be quite a prescriptive format. Every large company the same, every large private company the same. We also see, separate to that, significant improvements in data and measurement. So for example, the use of technology might enhance our understanding of supply chains, so distributed ledger technology, for example. And we see new frontiers that are going to be examined, such as the intersection between the world of finance and the world of nature. We look forward to contributing to the Task Force on Nature-related Financial Disclosures. There are some cautionary areas that we believe need to be watched. So, for example, net zero claims. We think that the market has become very long-sighted when it's normally short-sighted. So often what you see in the financial world is near-term analysis of the financial prospects of companies. Now what we're seeing is very long-term goal setting on net zero, but not as much near-term, planning, if you like, or disclosure of that planning. And so we see a bit of an information gap and a bit of an interesting conundrum where the markets are typically short-sighted, but in this case, they're long-sighted without some of that nearer-term perspective being disclosed. And so that is an area to watch. And we also think that we need to watch for making sure that we don't claim that every fund is an ESG fund without those claims being backed up by examining real-world outcomes and real-world impacts. So I'll leave you with some thoughts, and I very much hope you enjoy the rest of the conference, and it's been an absolute pleasure to talk to you today. Thank you.